think that shares of GitLab are trading at really good value at the moment, and in this video, I'm going to be explaining why. If you take a look at the share price, it has been bouncing around for the last 3 years, not really going anywhere, went up to about $75 a couple of times, and also has massive support around the $40 mark where it's sitting close to at the moment. In the meantime, GitLab have been continuously advancing its platform to thrive in the age of artificial intelligence. Just last Thursday, we had this news come out. GitLab has launched a public beta version of GitLab Duo agent platform designed to create asynchronous collaboration between developers and artificial intelligent agents. So what I really like about this is GitLab is now talking about moving into the age of agentic AI. It was only in April of 2024, its Duo AI assisted coding tool was made public in April of 2024, and now they have released the next phase of that, their agent for the era of agentic AI. And I've talked about this in a prior video. The big risk when investing in GitLab, there's basically a duopoly in DevOps between GitLab and GitHub, obviously GitHub being owned by Microsoft, which is the larger of the two, and Microsoft has infinite money, tools, and distribution at its fingertips in order to thrive. So that's the risk with investing in GitLab. But what's interesting is if GitLab are really continuously investing in artificial intelligence, their advantage is GitLab are more of the complete DevOps all-in-one suite. So, GitHub is massively the market leader when it comes to actual AI code assist, but GitLab is the leader in the platform across the DevOps lifecycle. So they do all of the continuous integration and continuous deployment in-house, for example, and you don't need to rely on a multitude of different softwares in order to continuously deploy code and upgrade your software. So this could be a massive catalyst for the business because the agentic AI will benefit from the fact that it will know a lot about what these DevOps teams are developing and be able to assist with that in the best way possible because of all of the data that it has. GitLab also has significant reach with the enterprise side of things that have the capital resources necessary in order to pay for these additional advanced features. Another thing that's attractive about GitLab is the organic growth in the industry is very fast. Obviously, there's a lot of different estimates, but this one from iMark, it basically anticipates a 20% CAGR going forward for the next 8 years. So this is a massive greenfield opportunity, and it makes sense because SaaS used to be a very new field. When things were first done online in a software subscription, it was novel, and a company that got there first did very, very well. But now software is becoming a much more mature industry. That's one of the key catalysts for GitLab and the DevOps space in general, because software is becoming more competitive. So in order to stay ahead of the game, particularly in the artificial intelligence age, which accelerates innovation even further, companies are going to have to build very, very good DevOps teams in order to stay ahead of the game and continuously upgrade their software, which is what GitLab can help them with. And further than that, humans and AI can work together within something like GitLab in order to work out how to upgrade, improve, and then deploy what the company wants to do optimally within that software. So this all sounds very positive, right? And you may be asking, why has GitLab traded sideways for so long? It's trading at pretty good value, 11 times market cap to gross profit, and about 7 times forward sales. If you look in Q1 of 2026, they basically came in line with revenue and didn't raise their guidance for the full year. Their 2025, which was actually reported in 2024, was marked by a whole host of guidance raises, and they have not raised their guidance yet. So it was just a small revenue beat and guidance reiteration. And because GitLab is a very volatile stock, this basically spooked the market. Yeah, so you can see last year, their initial guidance when they released the full year in 2024, that was 25% year-on-year growth to 728 million, and they ended up revising it up and up and up, and then they did 31% for the full year. So now they're forecasting 24% growth for the full year this year, which isn't that bad considering that they just reported 27% growth. So it's not a ridiculous slowdown. However, they didn't revise it upwards in Q1. So I think that spooked the market a little bit, but you can really understand from this new news, number one, the management team are very, very ambitious and are following through on what they said about making GitLab an AI first company and using that proprietary data advantage and their complete DevOps lifecycle, all of that data that comes with the advantage of being in a DevOps lifecycle, everything being in one place in order to propel that advantage in the age of agentic AI. So that's what I really, really like about GitLab. And obviously, because the shares have been trading sideways, here's the forward price to sales, pulled all the way down to 7.57. Here's the revenue growth as well. You can see it tick down slightly in the past couple of quarters. GitLab are becoming profitable as well, so they're investing a little bit less, or the growth has been a little bit less in their sales and marketing and R&D, so they're becoming more profitable. That led to a bit of a slowdown in growth, but of course, when a company is growing so fast, it's not unusual to see these slight slowdowns. And compared to a lot of companies that I'm tracking in the market cap range between 5 and 20 billion, which GitLab is pretty much in the middle of, and also growth between 20 and 30%. This growth is holding fire, at least for the moment. I'm hoping that when they're forecasting 24% year-on-year revenue growth for this year, it will actually end up being in the range of 25 to 26%, which will not be a notable slowdown whatsoever. And of course, if they can pull this off with the agentic AI catalysts, as you move towards the second half of the decade, that will be massive for them. Here's a graph with a lot of information. So in purple, we've got their revenues, and in red, we've got their sales and marketing. And you can see back in the day, GitLab had to spend a lot of money on sales and marketing, at one point more than revenue, to try and acquire these new customers. Now their new customer acquisition is not as fast, and sales and marketing as a percentage of revenue has gone down. By the way, this figure also includes G&A. So it's sales and marketing and G&A, and then the R&D is in blue. So if you add those two up, you basically get these generic operational expenses, which summed to more than revenue. But now you've got revenue in purple being continuously growing, and then you've got these expenses coming down a little bit, and that has led to now much more positive free cash flow, which we can see in orange. And actually their forward price to free cash flow for the full year is only about 38, which is not ridiculous considering that their forward free cash flow margins are only about 20%. And that isn't nearly optimized considering that the company has nearly a 90% gross margin. It's quite interesting. There's a company called Monday, which is about double the market cap, right? And they are more involved in general project management. So GitLab is obviously project management specifically for DevOps teams and technology, and Monday.com is much more general. So you could argue that Monday's TAM is larger, but then you could also argue GitLab's industry growth or opportunity is growing faster because they are specifically linked to DevOps, which grows as software becomes more complex and becomes more competitive and requires more consistent updates, etc. So you can see comparing these two, as I said, forward free cash flow margin for GitLab, 20%. For Monday, a bit more optimized. Forward price free cash flow, 38 versus 48. On a gross basis, GitLab is 11, was Monday's at 17. And I compare these two because very, very, very similar growth rates. So over the past 3 years, 44 and 46. Next year, Monday's forecast is to do 26 and GitLab's forecast is to do 24.2. So comparing these two, GitLab looks quite cheap. And I just wanted to make that point, given this gross margin of nearly 89%, they can obviously get that free cash flow margin upwards. And if they were even more optimized and not spending much on R&D or less on sales and marketing, that forward price free cash flow could be as low as 30 or even lower, which for 24% revenue growth is actually pretty good value. And testing what the market has valued GitLab at historically, we can see that that forward price to sales is indeed very low. So just talking about a few of the negatives as well, because I mentioned that GitLab has the best all-in-one DevOps suite. It's got all that data in one place, and basically the distribution to implement this agentic AI all under one platform. The problem is that obviously GitHub, they were already at 2 billion annual revenue run rate according to Nadella in one of Microsoft's earnings calls, and that was in July of 2024, so coming up to a year ago now. So they're larger. They've got the Copilot, GitHub Copilot, And obviously they've got Microsoft, which have a monstrous R&D budget and are very focused on artificial intelligence as well. And whilst they may not have the scope within one platform, they've actually got the scope when it comes to, obviously they have Azure and they have all kinds of other tools that then means that actually, do they have more horizontal deployment than GitLab? Kind of, when you say it's not under one application. So that's the main risk, but then at the same time, this is an industry growing 20% a year, and if you want DevOps pure play, then GitLab is a way to do it. And at the same time, it is almost positive that Microsoft are investing so much into GitHub, because it actually shows that the very smart people in the world think that this is a big opportunity. One positive and negative for that as well is that actually historically for a few quarters, Alphabet, their largest holding were GitLab, and now they've reduced that a little bit. They still have quite a large holding in GitLab, but it's not as high as it was, and it was their largest sell on the quarter. So they have sold off a few shares of GitLab. I think GitLab, they were really looking to be acquired at one point, and they still are. Google was really considering that, and I think they've now kind of gone off the idea, but just because GitLab are being sold or like they're selling some shares, it doesn't necessarily mean that everything is going wrong with GitLab. The same that obviously Alphabet are selling a lot of CrowdStrike at the moment, and that is a company that has done really, really well in the past couple of years. I know they had that massive bug or software glitch that basically caused half of the world to not run for a few days, but CrowdStrike have recovered from that and are since doing really well, and Alphabet are selling them. So that's not necessarily a bad thing for GitLab, but obviously it would be much more bullish if Alphabet were actually increasing their stake instead of decreasing it. So yeah, on the whole, just to sum up, you've got a company that's in a rapidly growing industry as software is becoming more important. Obviously software is going to change fundamentally with artificial intelligence, but GitLab really seem to be at the forefront of innovating their product and using their data advantage so that AI can actually enable better software coding. And as software gets more competitive and gets more of a crowded field, because it is a crowded field these days, any company that makes a lot of money from software is going to have to work very hard in order to keep their software fresh, updated, and deployed well. And that's what GitLab is really there to help the DevOps teams do. So I like this company. I think on the whole, even though it has those risks, it has good AI tailwinds. And as I said, they're trading a multi-year low valuation at the moment. So it's a good time to have a look at this investment, considering that they have these strong AI catalysts, but the valuation multiples look relatively compressed.